Hello, everybody, and welcome back to a special episode of the Commodity Insights podcast with the team at Farmers Trading Company here. Bringing you a special report after the May 10th USDA report for the grains. Initial reaction from the markets, the corn went a little higher. They were pushing higher before the report, but then it helped them to drive a little bit higher. And beans have kind of chopped around lower, higher, lower, higher. Currently, they are a little bit higher with support from the bean oil contracts. Right now, the July corn is up about 11.5 to 12 cents. The December corn for this year is up 10 cents. I'm looking at the beans. The July beans are up 9.5 cents, and the November beans are up about 4.5 cents, right toward the end of the trading day here on Friday. Overall, the report was pretty quiet. Not a whole lot of news from the 2025 crop year, 2024-2025 crop year out of the U.S. Big things that kind of did stand out, though, they did not cut the production numbers from South America like some of the private estimates have it, and so that was disappointing. And I guess there was a little news in the wheat market. What all stood out to you there, Andrew?
Yeah, I think the biggest things that the market is looking at right now is our US ending stocks for both old crop and new crop. They did cut on corn. They cut both old and new crop corn carryout numbers. So I think that's a lot of what we're looking at here right now. Soybeans for the old crop, we kept them flat and we expected just a touch of a reduction. And the new crop soybean carryout numbers, I'm just looking at my sheet here. Looks like we did raise that a bit more than we thought we would. Wheat market a touch lower than we thought, both old and new crop for the carryout numbers there. So that was the biggest thing. Yield, of course, we kept unchanged. Some people said that we were going to reduce that, and I didn't care for people who were saying that we'd reduce it. It's way too soon to be doing that. They still have us pegged at that 181 trend line yield and the 52 on the soybeans. So looking at some other stuff that we had on this report as far as the wheat goes, we did cut the all winter wheat number for production a bit more than we thought we would. That mainly came from the hard red winter wheat area. So I wonder if they're citing some of the drought issues that they had in Kansas. Western Kansas had some issues there. Otherwise, looking at that report, we did cut our Brazil corn crop, just not quite as much as we thought they would. Soybeans, we cut them just a touch. Argentina corn, we cut a little bit, and beans, we kept flat. And I really expected a reduction in Argentina soybean production. So I think that was the biggest surprise that we had in the market. And then finally, we also had the China imports that we're predicting for 2024-25 crop. We have at touch more than we had last year. And I think that's a bit of a surprise given the way our export market's been going, especially with the US dollar trading where it's at. So not complaining, but that really took me by surprise.
And then from a producer standpoint here, Andrew, after this report, do you think a guy should think about maybe making some of those new crop or old crop corn sales or bean sales, or still be patient with those as time comes? Or how do you think this is going to play out in the coming weeks?
I read something online and I'll echo it here. Corn prices, it's at 490 on the futures market right now, and we're expecting a 2.1 billion bushel carry out for corn after this year's crop. And I can only imagine there's a pile of orders at $5 just because of it's a nice even round number. So is it a bad idea to do a little bit of selling here prior to $5 just to get a few sales on the books? It is not a terrible idea. Am I going to go out and do a big pile of bushels for myself? No, probably not. But would it hurt to do 10 to 15%? I don't think I'd be opposed to that idea. Soybeans, I'm personally okay with being a little patient on, but there is plenty of carry out there, but not as much just because we are using a bit more domestically. Soybean chart, I think, looks maybe just a touch more friendly than corn. So if you want to be patient, I would choose soybeans over corn.
That's going to do it for this special episode of the Commodity Insights podcast. If we could be of any further assistance to you, check out the website, farmerstradingco.com, or call the office at 996-6500. Thank you.